We're going to do a quick video on SP500 Bear Market, and we've got a daily chart for the SP500 E-mini futures contract. And to take a look at this bear market, we put out a video a few days ago and we got some confirmation on the bear market bounce here Friday. So we'll take a quick look at this. This big bar here that we're looking at is the 26th. That's Friday. This chart has not updated yet for today. It's Monday the 29th. But let's take a quick look. As we discussed earlier, we're in a bear market in the SP 500. Again, we're using the E-mini futures contract as a proxy for S&P 500. There's a whole lot of different S&P 500 or SP500 indexes we could look at, but we're choosing the E-mini. It's the most liquid futures contract, one of the most liquid in the world. So we take a look. We see that we're in a bear market because we are below the 500-day moving average. This is a blue 200-day. I said 500-day. I meant 200-day moving average for blue. Red is 20-day moving average. Green is 5-day moving average. So we're below the 200-day moving average. We came up here on the 16th and bounced right off at a classic challenge of the 200-day. From the bottom, it came up, bounced right off of it. So we're still in a bear market, and we got this big sell-off here Friday. Now, in the scheme of things, this was a huge move Friday. Tremendous amount of money to be made if you shorted it. Our indicators on Friday indicated you should go short above 4,200, and it turned out to be a good trade, but of course it's all for entertainment purposes only. But wanted to review it again today to take a look. What does it mean for the bigger picture? If you take a look at this, the 20-day is obviously being violated. It was violated Friday. It's not on this screen, but right now we're trading at about 4,021, which is let's see where we are here. We went to low of 4,042, so we made a new low today, about 4,021 today, and that's where we are right around 11 o'clock Monday morning on the 29th. But the high for today is 4,050, and the low is 4,006. So we made some newer lows this morning, and a continuation of this bear market sell-off. But keep in mind, this is not a big deal to retrace 50% of a rally. We're coming up from 36.42 roughly to about 43.27. So, right around in this range here, I'm just doing this off the top of my head, this 39.60 range would be 50% retracement. That's no big deal. So I don't look at this sell-off Friday as being a huge deal. We are in a bear market on SP500, but again, we're looking to try to decide what to do. When you come up and rally and you test the 200-day moving average, the market is telling people, hey, we got a lot of strength here and we want to see if we're going to go higher. When you get a bounce like this off the bottom of a 200-day moving average, you're just basically seeing a lot of profit taking. And especially when you're talking about the S&P 500, this is one of the most widely followed futures contracts in the world. So you're going to get tremendous volume, tremendous liquidity. This is going to be a great way to make 500 SP500 trades. And so I think it's a really honest index, and I don't mean that in a bad or good way. I just mean it's a very, very straightforward, intellectually smart way to look at the 500 and see what's going on. And as we can see, it's moving classically towards a test of about the 50% level. I don't know if it's going to get there. If it does, it's probably going to get there around let's call it the 39.60 level within the next week. And then what we would be looking for is a rally and perhaps a correction around 41,200 back down to about the 40, maybe even 40.20 level and 4,020 level, and then a challenge about middle of October or so, again up against the 200-day moving average. That's what I see for this stock. Some continued decline, this index, some continued decline down to about 39.60, back and forth, some seesaw motion, and then another test of the 200-day in early October. That's what I'm looking at right now as best I can see. All for all my opinion only, all for entertainment purposes only. If we got a significant close above the 200-day, supported by the 20-day and the 5-day moving average, then we might be out of this bear market on the SP 500. We're going to have to wait and see. But that's what I see going on right now. So the bottom line is this huge sell-off we had Friday was in the trading range, and I don't see it as being a huge deal, but it was fun to watch. Let's go down and take a look and see what RBAM Research says. We offer algorithmically generated prices for the S&P 500 E-minis every day before 7 a.m. They are right here. And I don't have today's rates on this screen, but I'm looking on another screen on a different computer. And again, the bottom for today, 4,006. So on the one-day hold, we did not hit these. These are 1, 2, 5, 10, and 20-day holds, and we have not hit in the 3,000s yet, but we did hit this price. So if you had a 2-day hold in mind, you could have bought, again, for entertainment purposes only, you could have bought 4,000 here, and you would, where the market's currently trading at 4,022, so you'd be up a couple points, well, point and some change already. Keep in mind, what you do here is you look to hold worst case 1, 2, 5, 10, and 20 days. You make your selection, but you take your profits as soon as you get them. So we'd be looking to take a profit today in the S&P 500 or SP500, assuming we get a rally in this bear market. So we're hitting these prices here in the 2-day column, and we have not yet hit the high of 4,064. Our high for today is 4,050. So extremely interesting to take a look at, again, for entertainment purposes only. And you should never rely on these for anything other than entertainment. You have to do your own analysis. But we put these out every morning before 7 a.m. These are for today, the 29th. Again, we're talking about SP500, and in particular here, we're looking at the symbol ES for the futures contract on the Chicago Mercantile Exchange. If you're interested in getting these every day before 7 a.m., you can get them free, absolutely no cost and no credit card required at rbamresearch.com. We cover 190 stocks, long onlys. We cover forex, longs and shorts. Crypto is, we cover BTC. And for the futures, which is what we're looking at, we cover the S&P 500, crude oil, gold, and treasury bonds. Those are all longs and shorts. Everything's longs and shorts except for the stocks. Again, updated every weekday morning before 7 a.m. at rbamresearch.com. There's a link in the description below. If you like this video, please hit the like button. If you want to subscribe, please do that. If you have a great comment about how we can improve these videos, we'd love to hear it in the comment section below. And keep in mind, everything is for entertainment purposes only. Everything you've seen or heard here is for entertainment purposes only. It's all our opinion, and you definitely trade at your own risk.